Let's go next to the Aussie dollar, US dollar on monthly charts, and here is a security we've seen some fairly dynamic activity over the last month or two. And here we see this second last candle on the chart. This final one here is the current month that has just started developing. But here we see very strong bullish activity. One of the largest white body candles that we've seen for some time, for at least the last 6 months. And also the prior candle was quite bullish, but we see an extension to the size of the white body here, so it's suggesting that net momentum to the upside has grown, it's increased, and suggesting that the buyers are becoming stronger. And this is upon a breakout to the upside above the resistance around this 77.60 level. The buyers have continued with control, closing up towards the high, and the range of this candle is extended further, suggesting that the buyers are continuing to show some eagerness. Now moving next to the Fibonacci candles, and we have to just disregard that final candle because we know Fibonacci are a combination of 2 months, and so that final month is not completed yet, and it is very dynamic at the moment. But certainly that month here for July, the one that has completed trading, we see a good extension to the size of the white body here. Look at over the past 3 or 4 months, very small body trading, denoting a lot of indecision, and certainly around all of this time through the last 12 months or so, mainly very small body candles, so a lot of indecision following that very dynamic and strong downtrending activity where the sellers had very strong control of the market. Here we see the buyers coming back into the market solidly now. No shadow on the bottom with a largish white body suggests that the buyers have shown some strength, and it does suggest that we certainly, or it certainly does seem that we may have seen a significant change of sentiment in this market, shifting to the buyers. Now, just looking at important areas of support or resistance, and going all the way back here until 2010, and we see this major swing low at 80.68, and that was an area that was tested in April 2015 and held as resistance. At the moment, for this month that has finished trading, we have tested there once again. We saw some minor rejection from there, so that's a very important area for the market to breach if we are going to see any further upside. Above there, we also have another minor swing high, around the 81.55 area, so just monitoring that area up to 81.55. But this solid build of momentum does suggest that the buyers look as though they are building that strength to trade up to high levels, and will probably get through these areas. Now next over to patterns, and patterns tend to work out pretty well in FX, and here we see something of a triangle pattern we see here previously at the end of this significant uptrend, this major uptrend over multiple years, where we had this symmetrical triangle, and the breakout to the downside, the market developing further to the downside. It manifested itself as a reversal, and also once again we have confirmation of a reversal pattern here. It's not a wedge, it's probably a little bit too wide to be a wedge, it's a smaller version of this type of triangle, but still a symmetrical triangle, and fairly well defined upper boundary here. The close above in a bullish manner does suggest that we certainly should have a fair bit of confidence in the probability that this breakout is valid. Now just looking here for a possible target upon this breakout, and it gives us a target up around the 87.60 region, which coincides with the top of the cloud. Now obviously there's no impedance from the cloud here for this next month that is forming until we trade up to that level, but as we move into and we're not likely to get up to that all in one go, as we move into the next month, the target may not be achievable because of the potential resistance at the bottom of the cloud. The cloud moves down for the next month down to around the 85 cent level, so we could find some impedance to reaching a target there, so not a terribly realistic target at 87.50. If the market does play out over the next couple of months with uptrending activity, a target could be around this, roughly about this 85 cent level. Now another pattern that had formed is something of a potential diamond type pattern. They tend to be major reversals, and we've had the breakout above the upper barrier. We don't tend to see them, they're not that common, but important when the market does close to the upside above here. And a diamond pattern is really like two triangles put together, an inverse triangle first and then a normal triangle. So they can be quite important patterns at major turns in markets. And then another pattern that may have been forming over some period of time is something of a complex inverse head and shoulders pattern. And this is not a head and shoulders, it's inverse because the trend is to the downside. As always, with any trend, we need with any reversal, we need a trend leading into the pattern. So here we have the trend leading down, the market forming this congestion area, more dynamic area here with head and shoulders patterns. But here's something of a left shoulder, a very complex head here, and something of a complex right shoulder as well. Close above the upper barrier last month, strong follow through here. Very often we can see a retracement back towards the neckline here, the neckline drawn between their two shoulders, and with the Tenkan trading around this area around the neckline, roughly about 76.13, we're likely to find very solid support. So if there is any retracement, we're likely to see the buyers coming back into the market. Now this gives us a target also around the bottom of the cloud, so it coincides with what we've been looking at with the symmetrical triangle. So with these two targets being around the same area, probably gives us a little bit more likelihood of the market getting up towards that area, although I'm just have to worry about the Ichimoku cloud coming into play as a strong area of resistance. Now looking at the using the pitchfork technique, and here we're looking at this uptrend and then the downtrend, and we're examining this uptrend that the market's in. We have seen the market finding support within this internal line and bouncing off there in a strong bullish manner. This certainly does suggest a very good opportunity here for the market to trade to the median line, and it gives us a very good target here for the next candle, which is around the 82.41 area. So a very good possibility of the market getting up to that area. If we do break out to the upside and close above there, we have some other targets in this much bigger picture line, but in this next internal line to the upside, but it is above the Ichimoku cloud, so not too sure that we're going to reach that type of target in the near future. We could eventually, but it may play itself out over a longer period of time. And we'll go to a minor pitchfork line here, and we're looking at this first time frame uptrend, and here we see the market finding some resistance for the end of this month at the first warning line, and it is an area that the market will need to breach through. Support coming in for this month at the median line, so if we do see the market come off looking for initial support at the upper median line around the 78.40 level, a breach up through that first warning line could easily see the market trading up to the next warning line, that 200% level at 83 cents for the next candle. Now just looking at our band chart here, and the band chart is really also signifying that we are seeing the start of a potential primary bull here in the Aussie dollar US dollar. And just going back to our Ichimoku chart, bullish breakout above our benchmark. On the monthly charts, our benchmark is the Kijun Sen indicator, the pink line here. Strong bullish breakout, strong bullish follow through, taking out those swing highs there suggests that we do certainly seem to have transitioned into a major bull, so good potential for further upside. And on the bands here, bearish breakout, strong bearish follow through, and then the strong downtrending activity. Here we had the squeeze going on in the transition phase here, where we see an end to that trading down below the lower band, the market finding resistance around the upper band, testing back down to the lower band, unable to break out through to the downside. Couple of probes around the lower band while the bands are squeezing, so low volatility situation in a cyclical manner, looking now for volatility to come into the market. Breakout last month, didn't take out these swing highs. This month we took out the swing highs with strong follow through, so pretty much convinced that we certainly have the basis for the start of some strong uptrending activity and a new primary bull in the Aussie dollar.